Welcome everybody to our podcast. We are going to cover the 2019 year in review here for our industrial market. And Matt, I got to say, 2019 was a fantastic year from a capital market side, from a leasing standpoint.
Construction.
Just a great year all the way around. What are some of the things that stand out to you about the year in 2019?
Absolutely. I agree. It was certainly a blockbuster year. I would say the birth of the South Sound being Frederickson, DuPont, Lacey. We always knew about DuPont, Lacey, but Frederickson, I think, has been a huge story in 2019. From Best Buy kind of kicked it off to Ashley. Ace Hardware just signed there for about 500,000 feet. SeaTac Packaging, you got another deal under contract that's like 73 acres going on. You got Coastal looking like they're signing on a building there. You got many institutions, LPC, Panattoni, Exeter, Avenue 55, all acquiring and building there. I mean, you, as we've joked about in the past, could you have driven there 24 months ago without a mapping assistance? It's
amazing. I mean, it seems like overnight become just a huge market. I mean, you have over 3 million square feet of leases signed there in the last, call it 4 or 5 months. And when there were some companies that started going spec there, and at the time you're like, is it the right time? And boy, that the big box activity has certainly shifted down there. Part of that, I think, is there's not a lot of big box available north
valley
of there, right? In Kent, Sumner, and Tacoma. But yeah, 2019, I think one of the trends is the birth of the South Sound and the big box activity down there.
For sure. I mean, the absorption, which we'll talk about later, is kind of crazy how it has shifted from most of our careers. The predominant market was Sumner, and it shifted. Maybe there's several reasons, but I think the biggest reason, to your point, is lack of large product there that used to be there, and now it's shifted. But it seems like, even with some availabilities, these guys are choosing to go down there, right?
Yeah, I think so. I mean, the big box certainly, and I would say Pierce County still had a really solid year this year, even without having a ton of big box availabilities, right? I mean, the bread and butter, as we've always said, kind of in that Sumner and Fife and Tacoma market is that 150 to 300,000 square foot market, and a lot of really good activity there in 2019. Pierce County, I think, had a really good year as well. South Seattle was kind of flat,
a little bit flat there.
Yeah, and the Valley was good, and rents are continuing to go up, which we'll touch on as well.
That's right.
Talk a little bit about the multi-story birth and how that's going.
Yeah, great point. I would say that is the other takeaway from our market, as well as other markets, is the birth, or I should say the rebirth, because that was really a thing of the 1920s and 30s with the multi-story Sears type, distribution centers were really multi-story, and now we've gone back to that model, although they weren't driving trucks, multi-stories on those old projects. But yeah, I mean, congratulations to Prologis and Amazon and Home Depot for filling the first multi-story project in the United States. And then obviously several people followed, not only in this market, but other markets. And, in Seattle, we're seeing Trammell Crow, Avenue 55. I think Lift Partners is going to kick one off. So you've got several projects here. You've got some in San Francisco, New Jersey. So it is certainly starting to be a trend.
Definitely. And I think from a credibility standpoint, from a tenant's perspective as well, the Amazon, the Home Depot deals, the fact that they signed in a multi-story warehouse, I think will help other tenants get comfortable with doing the same thing.
That's right. Let's talk a little bit about rent growth. I mean, we continue to see huge rent growth here with last year's rent growth was just over 9%. And if you average it out over the last 3 years, we're averaging just over 8.5% rental growth. Crazy. I mean, year over year.
Yeah. It's been great the last 3 years, and prior to that, it was probably even higher than 8 and 9%. And so we continue to see it. I think the fundamentals are extremely strong. In particular, when you're between Seattle and Tacoma, there's not a lot of land left, as we know. Good tenant activity, so I think we're going to continue to see that. We talked previously about how we felt like that the gap between South Seattle and the North Valley,
that's right,
was too much, right? I mean, we were averaging a while ago, it was about $1 $25 in South Seattle, and we were at 60 cents in the Kent Valley. And now when we look at it, we're closer to $1 in South Seattle, and we're about 70 cents in the Kent Valley. And so we felt like that was going to happen, and it did. Just the discrepancy was too high between those two markets. South Seattle's still a good market, but we expected that gap to get a little bit closer between those two markets.
Yeah, you're totally right. Historically, the gap between the North Valley and Seattle, just 10 miles away, was typically 25 cents. And you're right, just looking at the charts and graphs that we're looking at here in the studio, it certainly has gone back to normal levels between those markets. What do you think of the rent growth in the South Sound? Obviously, we saw a lot of rent growth. I won't quote names, but we saw one south of Tacoma in early 2019 sign at 41 cents, and at the end of the year we saw one sign at 48 cents.
Yep.
So huge rent growth and where do you see that happening now moving forward?
Yeah, well, I think it's a reflection of land, right? I mean, a lot of those deals, you could do a 41-cent deal when you bought dirt for $5 a square foot or $6 a square foot, and as you know, I mean, dirt down there is getting more and more expensive. So I think we'll certainly see rent growth in the South Sound. I think we're going to see it continue to really see it in Pierce County and the Sumner, Port of Tacoma, and Fife markets as well, just because there's not very much land left in those markets, and there continues to be, I think, really good tenant activity in those Pierce County markets. What do you think about South Seattle and the Kent Valley from a rent growth standpoint?
Yeah, South Seattle is an interesting one because, as you noted, we predicted that would, fall down in 19, second half of 19 and close that gap on the North Valley. I don't see South Seattle going down anymore. I think that it's gone down. It's hit a new equilibrium. And I do see the Kent Valley, North Kent Valley, being a huge growth factor. I don't think we're going to get the growth factor in 2020 in the South Puget Sound that we saw in 19, just because you got a lot more product coming online. So unless that gets absorbed as quick as it did, which would mean, back-to-back record years down there, you're probably not going to get the hike that you got in year over year in the last year.
Yeah, I mean, I think you would agree with this. We talk all the time, but the North Kent Valley is, if I was buying a building and I could pick any market to buy a building in, I would go North Kent Valley. I mean, no one's built, and I'd go multi-tenant. I mean, no one's building the smaller, call it 100 to 200,000 square foot buildings anymore because they're too expensive to build. And so, yeah, as you know, I mean, there's just a ton of activity from a tenant standpoint that's still in that North Kent Valley, looking to be there. And so I still think we got a lot of room left in particular in the North Kent Valley to grow.
Agreed. I liked the site plan for the new Boeing stuff that Pantone's bringing out. Smaller base stuff.
Yeah.
They should do very well on that project. To your point, not a lot of people are building that stuff. So
yeah, I mean, you look at some of the deals we're doing now, you're 85, 90 cents a square foot on the shell for, some of those smaller spaces in the North Kent Valley. And if someone would have told you that, 5 years ago, you would have told them they were crazy. But,
for sure.
But I think we got room there to continue to go up.
Yep. Absolutely. And then everybody's, every year talking about Amazon, but I feel like in particular, 2019, they just kind of pushed the pedal to the floor and really were taking down big footprints across the United States, not just Seattle, but then doing something they said they were going to do, which is taking down a whole lot of smaller projects, right? Certainly we saw that impact here.
Yeah, I mean, there was, they did, obviously the big deal at the multi-story, building, but to your point, they also did a handful of deals in that, call it 50 to 70,000 square foot range. And, a lot of that, of course, is, get product to your customers faster.
That's right. Exactly. It'll be interesting, too. We just recorded a podcast on 2020 predictions that you'll catch following this one. And we had an economist on there really talking about Walmart, which from a Seattle perspective, you say, what? Walmart? Who's talking about Walmart? And give a listen to that because certainly Walmart seems to be making some huge strides on online sales and seems to be, I don't want to say catching up with Amazon, but give a listen to that. That was interesting.
That was really interesting. And from a logistics standpoint, they have it really dialed in. And I think he gave some interesting takes on Amazon on that as well. So definitely a worthwhile listen. Let's talk capital markets because we had a phenomenal year on the capital market side. And just kind of big picture, the demand from institutional groups to place money in Seattle has never been higher, right?
Agreed. Crazy.
Quite frankly, I don't think there's a gap between us and the Inland Empire. If there is one, it's very, very small.
Well, it used to be up till say 3 or 4 years ago. I would say we always said 50 basis point spread, right? I would say, yeah, I agree with you. 2019 was not only the year where you would say that gap is no more, but we had sales more aggressive than them. So I would say, not to say we're a better market than the Inland Empire, but certainly it is far fewer opportunities to buy here, and you got the same institutions wanting to buy here that they're buying there. And if there's, and we'll get to this, there was 42 transactions, which was a record, by the way, here in 2019. There was a lot more than that down there, opportunities at bat. Right. But we saw aggression here on a cap rate basis that we did not see in the Inland Empire in 2019.
Yeah, I think we're a little bit more insulated than the Inland Empire. But yeah, 2019 from a cap rate standpoint, I mean, we traded, the Auburn deal, that was a upper 3 cap and that was stabilized. And so I think that Seattle is now on par with that and with the Inland Empire, and we'll continue to see a lot of demand to place capital here, especially for the bigger deals.
Well, and then our market, from a capital markets perspective, has widened to the north and the south in 2019.
Great point.
Prior to 19, you really didn't see capital markets running down into Thurston, Centralia, Frederickson area, and then into Woodinville and Everett. You had a couple players, but now it's the norm, right? No problem. We're seeing low 4 caps on both of those markets. So we've now expanded our market in 1 year.
Yeah, when you look at it from a macro standpoint and you look at it on a map, and you look at a market like Everett, or you look at a market like Frederickson, and you realize you're in pretty close proximity to the heart of everything, right? And so you get a little bit of a discount, right, compared to the Valley.
For sure.
But certainly those are viable markets and will continue to be, I think, moving forward. Because as you know, we have lots of institutional groups saying, hey, where else should we be looking besides the Kent Valley? And so those markets will, I think, continue to be active.
Agreed. Let's talk numbers. So I mentioned total transactions, 42, in comparison to, say, our 5-year average of about 24 transactions a year, just under $1.5 billion in industrial trades in our market. And by the way, we track only $5 million deals, $5 million and greater, back-to-back years of $1.5 billion when our 10-year average is about just under $600 million a year. So over 2x our normal volume back-to-back years. Crazy.
Really good. I think a part of it is the excise tax not forced, but anybody that was thinking about selling wanted to try and get it in 2019 so they didn't have to pay the extra couple points. And then, there's been a lot of portfolio purchases too. I mean, certainly you look at like Blackstone and Prologis and the acquisitions they've made from a company standpoint. There's a lot of product in Seattle that went along with that. But I think it just speaks to the demand to be here and the fact that people will pay up and love Seattle.
That's right. And to your point on the excise tax, December, we closed just about $510 million in transactions on the industrial side in December, which almost meets our annual average in 1 month.
Yeah, we knew we'd have a big December. We didn't know it was going to be that big, but you look at the transactions we did, and a lot of them, were impacted by that increase in excise tax. I mean, 2 points on a $50, $60, $70 million deals, a lot of money.
That's right. And we continue to see a trend of off-market deals. We've been tracking this for years. Out of the 42 deals, 55% of those were off-market still, right? Crazy. Why do you think that is?
Yeah, I think that number is going to go down just as we've become more and more institutional. Mm-hmm. Institutional groups, don't like going off-market. Some of it is portfolio stuff. But some of it is just, hey, these owners have seen so many offers. They know what their buildings are worth. There's so many unsolicited offers being thrown around that, oftentimes these groups will have a number in their head, and if somebody hits it, they'll do it. And
That's
so
right.
They don't want to go through the hassle of putting it on market. It's definitely worth putting buildings on the market because you and I know there's so much demand. You don't want to leave money on the table if you're a seller, and so why wouldn't you go to market with the aggression that's out there?
That's right. And that's why I'm always baffled by how many off-market trades there are in this market. Because you go to other markets like the Inland Empire, it's like 9%. Right? It's not, and we continue year over year, it's over 50%.
Yeah.
It's just kind of crazy.
It is amazing.
Yeah. Let's talk about who the biggest buyers were. So in total dollar volume, number one was Blackstone. Obviously they bought GLP, but in this market, that totaled 3 transactions of just over $500 million.
Yeah, big part of that, portfolio purchase.
Yep.
Exeter was active. You start looking at who are the groups that are buying buildings one-off here in our market, and Black Creek was extremely aggressive and did a great job and performed on everything. Clarion, of course, who we love as well, continues to love Seattle and buy product close in if they can. TA was active this year as well. We sold TA a couple deals.
That's right. And Black Creek was number 3 at $105 million.
Yeah. So,
$113 million.
And then, you get the groups like Lyft and Torino that continue to be active and are great to work with. And so I think, there's more and more groups that continue to call us and say, we want to be in Seattle. We're not here yet.
That's right. The list keeps growing.
Yeah, it keeps growing. I mean, I met with a group out of New York yesterday who I had never even heard of, and they're, saying, hey, we gotta get here. And so
let
there's
me
just
guess.
more than that.
We have $1.5 billion to place in Seattle.
Yeah, we got.
And we're aggressive.
Yeah. We'll
cash.
pay up. We'll pay up. Yeah. So it's no shortage of buyers for sure.
That's right. Let's talk about number of transactions. So the most with 4 transactions was Lyft Partners. Smaller deals totaling just over $40 million. Black Creek Group, as we mentioned, was 3. Blackstone with 3. TA with 3. So those are your top guys, and then it drops down to 2 from there. BKM had 2, Clarion had 2, Duke had 2, and Torino had 2, and then drops down to 1 for the balance of the 42 transactions on a great capital markets year. Yeah,
capital markets was great. Now, large leasing was also, we had a phenomenal year. Yeah, as good as we've probably ever had from a leasing standpoint. So much talked a little bit about the large leasing and in particular, really the trend that has pushed those groups further south.
Yeah, Hello, Lacey, and DuPont, and Frederickson. We had the largest lease signed in Lacey at just under 1.3 million feet. Home Depot, followed by Uline at 810,000, and then DuPont, Kimberly-Clark at 747,000. Then, of course, shifting up north, you had Amazon on the triple-decker at 493,000, and Ashley Furniture rounds up the top here, 6 at 416,000. And then finally, Frederickson, Best Buy at 405.
Yeah, I mean, just a phenomenal year there. I think, and we've always said it, you can tell a lot about a market based on kind of that mid-market activity as well, and that's, in my opinion, as strong as it's ever been from call it 50 to 150,000 square foot range. And in particular, the majority of that activity is from Tukwila through Tacoma, and we continue to see great activity on that front. And a lot of those groups are looking to go from 50 to 70,000 feet or 70 to 100, and so I think that's just really a good sign for our market long term and short term, just that 2020 is going to be another good year with both the mid-market size tenants and the larger tenants. Because there's, as you know, a lot of large tenants that are close to landing. I think we talked about it. Q1 could be a record amount of absorption for us in 2020.
I think Q1 is, and that's based on, when we're talking about Q1 2020, because to your point, it was 19 activity that got it there. So we could have a first quarter that matches the entire absorption of 2019 in Q1, really between like 4 deals that are right there.
Yeah.
Yeah.
I mean, crazy. Complemented by the other deals that are, kind of bread and butter of the market. I think it's going to be just a great year. So closing thoughts. Let's talk about what you think about 2020 and where we're heading. We talked about large leasing and how first quarter could be a record amount of absorption. What else do you think about 2020 as we get cranking?
Well, talking about absorption, so last year, kind of the valley, South Seattle through Tacoma was about 1.8 million square feet of absorption, and then you obviously had some large deals transact down south that really puts us on a great absorption year total. But to our point earlier, I think that fourth quarter activity in 2019 is going to push a record absorption year and quarter in Q1 of 2020. And I do think that we'll have a record absorption year in 2020. There is a lot of deals right there at Signature. So I think you'll continue to see rent growth. Tenants. It probably in that same realm of, call it 7 to 9% this year. I think you'll see big rent growth, as we talked about, in the North Valley, and then maybe Seattle picks back up with continued online fulfillment growth and people needing to be close to the population base.
Yeah, I agree with all of that. I think on the capital market side, we might not see the volume that we saw
for sure. That'll be a drop
this
off
year, but we'll continue to see the aggression. We'll continue to see cap rates at the levels that we're seeing them at. But on the leasing front, I mean, I just think that fundamentally we are in a great position. I think Seattle, to your point, will trend upwards from a rent growth standpoint. I think that the North Valley, again, continued rent growth probably will lead the market from a rent growth standpoint. And Pierce County, of course, in the South Sound will continue to get great activity. So all in all, feel really bullish.
And the Seahawks will win the Super Bowl.
Yep. I definitely agree. I've been saying that. I say that every year, but really believe it actually this year.
That's right.
It's going to be a great 2020, and we're looking forward to seeing where it goes and being part of it.
That's right. Well, thank you for listening. As always, you can catch our podcast on your favorite podcast sites, and we appreciate it. And listen to our next podcast on 2020 predictions. Thank you so much.
Thank you.